Hello everybody and welcome to the channel. My name is Daniel Ackerman. I'm one of the listing specialists here at the Queen's Home team, and wanted to do a quick video to respond to a question from one of our viewers. So in one of our previous videos that George was doing about letter of no objection, shout out to Penpa Dolma. Penpa Dolma asked, she said that this was great information, but she wanted to know more information regarding flip tax for co-ops. So I thought I would do a quick video to talk a little bit about flip tax in co-ops. So the first thing to do is clarify what the flip tax is. So first and foremost, a flip tax is not actually a tax. Tax is a charge that the government levies against people. So, the city government, the state government, or the federal government, when they charge on your income or on capital gains or on the sale of a property, that's a tax. A flip tax is not actually a tax. A flip tax, or what's called the flip tax in New York City, is a fee charged by the co-op at the sale of a unit in the building. So it's a fee that is charged. Now, typically, it's charged to the seller. In very, very occasional instances, you will see a flip tax that actually is charged to the buyer. But at the end of the day, this is negotiable between the buyer and seller. I've done sales where there have been times that the seller was able to negotiate that the buyer pays the flip tax. Or there have been vice versa. I've had buildings where the flip tax was charged of the buyer when they're buying the shares for the co-op. And actually, we negotiated so that the seller would cover that charge to sort of incentivize the deal. But typically speaking, you'll see flip tax being charged to the seller as one of the closing costs at the closing table. One question people have is, what is the flip tax for? Why am I paying this fee at the closing? Whether you're the buyer or the seller, you may be curious, what am I paying this for? Well, the flip tax is used by the co-op. It's one of the various ways that a co-op uses to actually replenish or keep in good standing the reserves in the building. Co-op has operating expenses. They need to maintain the building. They need to pay operating expenses for that building. And so they have an account of reserves for that purpose. And the flip tax is one of the ways that they make sure to keep the reserves in basically at a healthy level so that they can maintain the building and make sure that they're giving, service to all the shareholders, basically. Now, the obvious follow-up question is, well, how much is the flip tax? There's no answer for this because every co-op establishes their own flip tax. Every co-op decides what that flip tax is going to be and how they're going to charge it. So it can be just a flat fee. It could be a percentage of the seller's profit. It could be a percentage of the overall sale price, or it could be an amount based on the shares. So a dollar amount per share that the seller is transferring over to the buyer. Remember, in co-ops, you're buying shares or you're selling shares in a corporation. You're not actually selling real property. So there's a stock certificate that goes with your sale that gets transferred over to the buyer that states how many shares you have or how many you're transferring. And sometimes the flip tax will be charged as a dollar amount per share on that stock certificate. You'll often see flip tax in the sort of 1% to 2% range if it's calculated as a percentage of the sale price. That's a pretty common thing to see, 1% of the sale price, 2% of the sale price. Less frequently, you'll see a percentage of the profit. And the reason for that is just that, a seller is going to profit a different amount on a sale depending on how long they've lived there, how they originally paid for the property, whether they paid with a loan or paid all cash. So the profit, that becomes a variable equation. How much a seller profits from their sale. It's also dependent on the market. If the market is strong and it's a seller's market, that seller could profit a bit more. If it's a buyer's market, they could profit a bit less. And typically speaking, a co-op is not going to want to leave their that fee up to the whims of the market, because it's very important for maintenance of the reserves. So typically you'll see it levied as either a dollar amount on the number of shares or 1 to 2% of the overall sale price on the property. So unfortunately, we can't answer the question for you here in this video what your flip tax might be in the building. However, if you are thinking of selling your New York City co-op, we would sit down with you, we would consult with you, find out the information, the contact information for the management company, and we can help you find out what that flip tax is going to be upon sale and whether it's payable by the buyer or the seller. It's actually very important information that we always want to get from our sellers, because it's going to help us calculate what your net profit will be from the sale, your walkaway dollar. We always work that out ahead of time and give that estimate to our sellers so that you know exactly, with all of the closing costs that you're going to pay, what you can hope to, an estimate of what you can hope to walk away from in the sale. So that's about it, everybody. Quick and dirty video on flip tax in New York City co-ops. I hope it was helpful. Penpa, thank you very much for the question. We hope that we were able to answer it fully. If you have additional questions about this topic or any other topic, make sure to leave it in the comments below. Just put a little comment down there or your question down there. We love to get your comments and questions. We try to scour through our comment section and find questions that people need answered for all of our videos or future podcast episodes. If you found the video useful, please give it a thumbs up. It helps out the channel a lot. And of course, you know what to do. You can subscribe, hit the bell, all that good stuff if you want to get notifications of all of our future videos. We know that you'll do that if you really see value here. But anyway, thank you very much for watching. My name is Daniel, and we hope to see you again in the next video.